Well, greetings, my beloved clients and friends. I'm coming to you today from Joshua Tree National Park outside of Yucca Valley. My friend Caesar's in the back, you might see him. And I wanted to give you a weekly review because it was definitely an eventful week. I think the market was down about 5%, portfolio close to that. And so what happened was Tuesday morning, we got the CPI report, which is basically inflation, consumer price index. And it was only up 0.1% month over month and 8.1% year over year. So that wasn't bad. But if you peel it back and look inside, oil was and energy was down about 5%. So it helped bring it down. But other things, two in particular, healthcare, housing, and consumer goods were up more than expected. So that was disconcerting. And one thing about housing I want to say is housing is considers rents and what they call owner equivalent rents. I'm not crazy about owner equivalent rents because about 60%, a little over 60% of people are homeowners and a little less than 40 are renters. And so the way they calculate the homeowner's housing expense is a thing called owner's equivalent rent, which means if you were to sell your house and rent it back, how much would your rent be? Well, that's kind of dumb because some people have their house paid off if they bought it a long time ago. They have a fixed rate. Most people have a fixed rate. So obviously be way more than if they had to sell it in rent, or if they had to sell it in rent, and it'd be going up versus, a fixed payment doesn't go up. But that goes into the inflation numbers. But anyway, the point was that it was a bad read. It showed that inflation is still alive and well within important segments of the economy, including, like I said, housing, consumer goods, and healthcare. So the conclusion was that Powell's not done raising, and that he had already been on track to raise, but that he's going to have to continue to raise aggressively, more specifically. And so the market that caused some fear and panic in the market, and it really sold off Tuesday. It bounced Wednesday, but kind of continued to drift lower Thursday and Friday. So what's my take on that? Well, I believe that it's a little bit of a lagging indicator because the rate hikes take a little bit of time to take effect, but you could already see that the economy is really slowing down. Companies, FedEx announced that they had to cancel guidance because they don't know how bad it's going to be. It's on Friday. A lot of the leading big tech companies have hiring freezes and they're laying off people, and although food is still going up, but I think the bigger worry is recession rather than inflation. So the concern is that the Fed is going to continue to fight inflation when they should be worrying about recession, and by doing push the economy into a worse recession than it had to be in. So that's a little bit of a concern. The other thing that happens when rates get pushed up is the dollar gets stronger. One, we talked about earlier that the U.S., although we're not in a great position, we're in a vastly better position than Europe and China. And when we raise rates, that makes our bonds that much more attractive. And when our stocks come down a little bit, our high quality companies, that makes them that much more attractive. So the strong dollar is going to have an effect on earnings in the next couple quarters. we're gonna, I think it was back in 16 or 17 that we went through a period when the dollar was really strong, and for about 2 or 3 quarters in a row, the big multinational companies, that was their excuse to do poorly, or their explanation why they were doing poorly was that they had currency headwinds. It became a common thread in the quarterly earnings calls, and I imagine we're going to start hearing those words in the quarters to come from our big multinationals. So I looked through the portfolio and I see which companies have international exposure: Salesforce, Nike, Apple. Those are the ones that come to mind that we might start hearing about that. So we're keeping an eye on that. But all that being said, some great companies are cheap, and we gotta think long term, because we're long term investors, and some fundamentals are buy when there's blood in the streets, be fearful when others are greedy, and be greedy when others are fearful. So a lot of people are being fearful right now, and we're looking and we're seeing some really good companies, and we've been sitting on cash. We had raised cash to 35%, and so we started deploying some of that cash. Recently we bought Salesforce, which I mentioned, Comcast, and this week we also bought Adobe, which is a company I really like. They help creators, and they provide the services for creators. Adobe Acrobat, Photoshop, PDF, and Illustrator. A lot of the tools for creators, Adobe has a huge share of that market, and it's almost a monopoly. And they've been expensive for a while, and they started getting cheap, and they bounced back. And I think I mentioned in the last call, I was concerned that I might have missed it, but on Thursday, I believe, they announced their earnings, and on their earnings call they also announced that they had acquired a company, and they paid too much for it. Let's just be clear. But the stock was decimated. It was down like 17%, and I looked at it and I said, even with the fact that they paid a little bit too much for this company, I've been wanting to buy Adobe, and I think at this price, I'm going to take it. And so it was below my price target, and we bought it. And so so around 2014, Adobe made us a strategic shift. They had been a seller of this software for design, right? And so you'd buy the software packet, and over time it become out of date as they brought the new ones and made improvements, and they had to continue to stay current on these software things, and they had to continue to support people that were using the older versions of the software, and so there was like people that didn't want to buy the new software, but they had to, and Adobe had to support the people that still had the old software. And so then they switched to software as a service. They said, instead of you having to buy the package every few years or whatever, we're just going to put you on a monthly billing, and we're just going to update it over the air. So you're gonna always have the current version, and you're just going to pay a monthly service for it. Well, a lot of the developers and the creators were just up in arms about that, but they did it. They successfully transitioned, and since that time, since about 2014, the market really loved the fact that they made that transition, and they've been trading at really high multiples. And so at the price that we bought it, it was trading at multiples not seen since that transition, since before, when they were a software company that sold their software. Okay, so I believe we bought it at a very cheap multiple. The company they bought, called Figma, was this upstart that was just gaining massive traction in an industry that they had a position, but it wasn't very strong. That their software in that space wasn't that great, and they knew it. And Figma's was better, and it was gaining market share on them. And they kind of, their philosophy was to essentially come after Adobe. And so I think they had to buy them. Now this company, they paid 50 times sales, which is an outrageous valuation for Figma, especially now. I mean, they're not paying those kind of valuations. So the market wasn't happy with that. But this was a company that had doubled sales from last year to this year. So if you figure they paid 50 times sales, which is crazy, a year from now, that price could, if they continue to double, could very well be 25 times sales, which is still a little bit high, but not insane. But in 2 years, let's say they double again, now it's 12.5 times sales, which is kind of where the market is. So in 3 years, potentially 6 times sales, and then you're like, okay, they got a good deal. So if you look at it that way, if this continues to grow, and I think, one, they were on track to continue to grow anyway. Two, now that they're partnering with Adobe, I think that growth could accelerate. Right now it looks like a bad move, but in 3 years it could turn out to be, that actually was a good move. If this thing continues to grow and gain traction, and maybe bring some startup vitality back into an institutional company like Adobe. So it's too early to tell if it was a good deal or not, and I think that's why the market kind of went to the sidelines on Adobe. But I fundamentally like the company, and I'm going to give them the benefit of doubt on this acquisition, that it'll be accretive, not immediately, but within a few years, and it'll help them continue to stay on the growing path. So that's basically why we bought Adobe, and I think we got it at a pretty decent price. But that being said, I think we're pretty much done buying. We're about 20% cash now, and with the uncertainty of the market, I think I want to be there. If anything, going forward, there's a couple names that we might be thinking about selling if we get a decent price for them, or protect the price from getting worse. And so I think overall we're done buying, unless we see something. So the cash position we have left, I'm inclined for us to hold on to, and if anything, raise it up a little, because there is some uncertainty. I think we want to have at least 20% cash in the portfolio. So that's just our thoughts on what's happened in the last week, and what we've done, and what we see going forward. So this week, Powell's going to announce the next rate hike, and I think it's going to be 3/4. Prior to Tuesday, there was talk if it's going to be a half or 3/4. After Tuesday, there was talk if it's going to be 3/4 or 1%. And I don't know what's going to happen there, but I'm leaning towards 3/4. And I think the market would be a little bit relieved if it was 3/4 and not 1. If it was 1, we could see some more selling probably. But so we'll keep you posted, and we're doing our best to navigate through this difficult time. Hope you guys enjoyed the change of scenery, and we'll talk soon. Okay, have a great weekend.